I'm delighted to be here today to present you Newbury Pharmaceuticals. My name is Lars. I'm CEO of Newbury Pharmaceuticals, and I joined the company this summer, and I have to say I'm impressed with what I've seen in terms of how the company has been built, in terms of processes, in terms of quality systems, and pipeline. And you'll see all of that during this presentation. So I hope you will be intrigued and have appetite to listen for 20 minutes to Newbury Pharmaceuticals. We need to take this one, and while we have this on the screen, maybe I can just briefly describe Newbury Pharmaceuticals. It's a pharmaceutical company. We focus on in-licensing products that are already developed and ready to commercialize or awaiting IP loss of patent loss, loss of exclusivity to be marketed in the markets. So we focus on the commercial part and have no research development nor production facilities, but focusing on licensing in products that can be commercialized. We do with a focus on Scandinavia, and we do it with a focus on prescription medicine in specialty medicine, which is typically high-priced segments and severe diseases. Newbury Pharmaceuticals has been growing at speed. It's a relatively young company, and I typically say that we are going from a startup to a scale-up company. We have been moving fast in terms of building quality systems, getting the necessary license to operate, and also build the management team. At the same time, we have also built portfolio, and this is where the value creation comes in. We have started initially with 11 products in the portfolio and had a private placement in early this year, which has been used to actually expand the portfolio with additional products, so that we, during the summer, had 19 products in the portfolio, and this autumn we expanded with 7 additional products, taking it to 26 products in the portfolio. And how those will be launched and commercialized, I'll get back to that later. But a strong pipeline in terms of products, a strong foundation in terms of systems and processes, and a strong management team in place. I joined the company. In addition to me, I have my colleague Fredrik, who's in charge of sales and marketing, having waste of experience from international business as well as Scandinavian business coming from AbbVie. And we have Christopher, who is CFO, who have strong experience from small cap listed companies. So a strong team that is supporting the growth of this company. The founder and chairman is Carl Carlson. Carl Carlson has a strong experience also from establishing pharmaceutical companies and was the founder of Bluefish Pharma, which was founded and established and grew into a strong company as is still existing. And Carl Carlson has sold all the shares in Bluefish Pharma, but is taking the learnings from having established Bluefish Pharma into Newbury Pharmaceuticals. And those learnings are basically 2 things: focus on the specialty medicine and a geographic focus on Scandinavia. So, as I briefly said before, we are a hybrid pharmaceutical company focusing on prescription, medicine, innovation, and brands. And with hybrid, we mean that we will have both branded products with IP protection and trademarks and brands around, as well as non-branded pharmaceuticals that compete with originator products, having lost patent or loss of exclusivity. We would like to be seen as the local champion in Scandinavia, the one that has the knowledge and the ability to commercialize products in Scandinavia, and be seen as the partner of choice when suppliers are developing products that want to be marketed in the Scandinavian markets. Ultimately, we would like to be a Nordic powerhouse, as we say, a Nordic powerhouse that is having a significant role in the Nordic markets and is having a sizable business in those 4 countries. In terms of the market where we operate, the pharma market, and for those of you who are not familiar with the pharma market, it is a growing market in terms of medicine spent. And you'll see that the Scandinavian market is actually growing by close to 6% year on year, with Sweden being the largest market, followed by Denmark and Norway. So growth is existing in the market, and what's interesting to notice is actually what is driving that growth. And you probably have read newspapers around increasing medicine spend and expensive medicine coming to market. And the next chart is actually about those kind of products, because what is driving the growth is what is called specialty medicine. Specialty medicine is complex products which are treating complex and chronic diseases, requiring a specialist to attend to the patients, and has actually been growing, if we go back to 2010, to around 25%, 20-25% of the total market, predicting to be close to 60%, 66% by 2025 in developed markets. And that would be the same picture we see in Scandinavia. The driver behind those products are expensive and new developments within cancer treatments, multiple sclerosis, rare diseases, where you'll see new products coming to market and driving the growth of consumption and spending. But also important to notice that 2/3 of the business in the future will actually be coming from specialty medicine. In terms of how we would like to translate all of that into our business model and strategy is, of course, of importance. And as I said before, we are a commercially focused organization. We focus on commercializing products in the Scandinavian market. We focus on getting the necessary approvals from health authorities in the market, the necessary price and reimbursement approvals, and driving the commercialization in the markets. So we rely on partnerships in terms of getting access to licensed products. So we have partners, and we have 5 strategic partners who are supporting us with brands, and we can expand that portfolio and that pool of suppliers as we move on. So currently, we have 5 strategic partners who do development of and documentation of products and build the regulatory files needed to submit to the authorities in the individual countries. So with the licensing agreements, we get access to all of the work that they have done and get the assets, and that's our assets, in terms of getting the registrations in the countries, and in some cases build a brand around it. In other cases, we have non-branded products in the market. We also typically, in condition with a licensing agreement, have a supply agreement. Some instances from the same player, other instances there's a 3-party agreement, so that we don't have assets tied up in production, nor assets tied up in development. We can focus solely on the commercial aspects and go-to-market models that we operate. What we're looking for in terms of products is basically, and that's what I said before, hybrid. We're looking for specialty medicine and own brands. Specialty medicine can be unbranded products that compete with an originator having lost exclusivity. But it can also be own brands where we add value to the medicine. That can be a new formulation, that can be a better dosing system. So instead of taking a medicine 3 times a day, we will have a product which can be given once a day. Certainly advantages to patients and also, of course, to society. So we're building here the hybrid of managing both unbranded specialty medicine and branded specialty medicine that can be marketed in the individual countries. And the go-to-market model or the commercialization strategy will differ for the 2 individual brands, and there will also be a mix in between. But the specialty medicine, which is exchangeable, non-branded, we will compete in tenders. And there are tender systems in place in Denmark, in Norway, in Sweden, where we can operate and compete with the players in those markets. When we're talking about own brands, it's classical promotion and marketing, where we are building a brand. And the beauty of those 2 is that they actually complement each other in terms of how sales are developing. So it's relatively fast to build unbranded tender business, whereas own brands require investments and a longer uptake, but then you also have more mature sales. So those 2 are complementing each other, and that's why we see a benefit of having both in our portfolio. In terms of launches, we will have a steady stream of launches, and all of that is dependent on registrations, prices, and loss of exclusivity to the originator brand that we are competing against. But we are planning to have a steady stream of launches over the next couple of years, starting with the first launch next year. So we are gearing up for a commercial launch and are building the organization, and that's why I said we are going from a startup to a scale-up. We're building now for commercialization of the brands. And we have appetite for more. That's the light orange part here. And we certainly have ambitions of adding to that portfolio, making sure that we can tap into new areas, new indications, and build value creation over time and have products that is also generating profits and sales in the long run. So we have ambitions of adding to our 26-strong pipeline, and that is partly what we are also pursuing: commercialization, building the pipeline, and building the organization. That's basically the three key parameters that we are having. Competition will be there. There's no secret about that, and we will compete with other players in the market. But we certainly also get inspiration from other players. With our focus on specialty medicine and on own brands, we believe that we can position ourselves in a unique position, having high-priced, high-margin products in specialty area, with own brands also, that is creating long-term sustainable business. There will be other players trying to get into that area, but many of those are having a legacy portfolio of traditional generics with high volume, low margins. And we are trying to avoid that and can do that as a startup company, fresh, focusing on a strategic portfolio that we are building. There are certainly also inspiration that we can take from competition. We are learning from Meda was once on the stock exchange in Sweden, that is now part of Viatris. Meda built a strong portfolio on merger and acquisitions, taking in branded products and integrating those into the organization. Certainly also something that we can do. Cow Pharma is doing to a large degree the same, but focusing on consumer care. We stay out of consumer care and pharmacies. We focus on prescription medicine and specialty medicine. So there are certainly areas where we can learn. We also have peers in the industry like EQL Pharma, based here in the area. A traditional generic player with strong sales and high valuation. Certainly also something we are learning from, but with our focus on specialty medicine, we believe that we can get faster to profitable sales and drive reasonable and strong profits. The pipeline that we have, as I said before, 26 products in the pipeline. And what's important to say here is that the pipeline has not been randomly chosen. It's been focused on our strategy in terms of getting specialty medicine and own brands. We have 3 indications where we focus our efforts currently. That's oncology, where we have a strong pipeline of 10 products within oncology. And personally, I have to say I'm delighted to work for a company that is offering products within oncology. We probably all know family members who have been affected by cancer. And to me, that is a strong testimony to actually delivering value to society. We also have a focus on rare diseases. Rare diseases is something that we typically don't have that much experience with. It can be everything from 100 to 500 patients in a country like Sweden. But typically, severe indications, severe treatments, and high-priced products where we can compete and deliver value-adding products at high price and high margins. Neurology is also a place where we are focusing, especially within multiple sclerosis, where there are certainly opportunities for us to enter the game here. So 3 distinct indications, and then a basket of other products, which is very strong products as well, but not grouped in a indication group as such, but you'll see products within an area like diabetes, for instance. So certainly testimony to specialty medicine, a testimony to our driving own brands. There will also be own brands part of this. One of the examples is a product called gabapentin, where we can add value to the product. Instead of taking a product 3 times a day for a disease which is painful, we can give the product once a day, and thereby patients can sleep overnight without problems and having pain overnight where the medicine doesn't work any longer. So we have opportunities to add value here to patients and society as well. So in summary, it's about building commercial muscle, it's about building the pipeline, and it's about commercializing and building hyper sales growth in the markets. That's what Newbury Pharmaceuticals is about and what we aim to do over the time. We have ambitions in terms of building the foundation, which we have done. We are also scaling for growth and believe that we will be having hyper sales growth as we move on. And we need to manage that hyper growth as we move on to make sure that we don't drown in complexity. And that's one of the focus areas that we have, that we need to make sure that we get products in that fit to the portfolio and fit to the strategy, and that we don't drown in complexity just in the interest of getting too many products, but rather have good, sizable products where we can add value. Also have ambitions of sales and profits over time, and of course showing that our business model is working. So with that, I hope that we have inspired you to see that we can become the local champion in Scandinavia and the Nordics, an alternative partner to suppliers who have products that want to be launched in the Scandinavian market. We strive to have a positive impact on society by bringing medicine to market that is needed, and are adding value to society and payers in that way. We do that based on our entrepreneurial spirit, maintaining that spirit of having a nimble and flexible and sizable organization that is fast to market, based on knowledge, based off the Scandinavian markets, based on a curiosity and openness to actually attract new opportunities in the market. With that, I hope I have inspired you to follow Newbury Pharmaceuticals going forward. Thank you.
Thank you, Lars. Thanks for a good presentation. And of course, as opposed to all the other companies presenting here today, you are not yet a listed company. I also understand that that might change soon, but that is to be communicated later, I assume.
That's correct. We are gearing up for funding and going to market to also get the appetite and attractiveness from our suppliers and partners, and could see that as an opportunity to spread our wings, you could say.
Of course, one of your bigger challenges is to manage hyper sales growth. That is a quite ambitious headline for a slideshow like this, yes. Hyper sales growth. It sounds like you are very certain that you will actually launch products in a large scale very soon.
Yeah. So the beauty of this business model is that we are bringing products to market that are already tested and tried and have built a commercial viable business already. We will be launching products that are going in off patent, and thereby the market has been built, patients are there, and we can compete in that market with our business model. And thereby we don't have the risk that you typically see in other pharmaceutical companies, where you have a early stage development program which takes 5-10 years before it reaches market, nor we have heavy investments in a phase 3 trial, which requires a lot of investments and still some uncertainty whether we go to market. We have tried and tested medicine that will be registered, and we will go to market and compete in the market. So with that, we also get relatively fast uptake of our products, and thereby we can also build relatively fast positive business and profits out of that.
So the only, or perhaps last hurdle that you need to pass in order to launch commercially is actually to get the products that are based on already approved molecules registered under a new brand or in a new market. Yes. And then you own the product, and then you're good to go.
Yeah, we own the registrations and have typically a supply agreement, which is a long-term supply agreement. Should that supplier change, or we would like to renegotiate, we are free to go elsewhere and change the registration to accommodate a new supplier. Our asset is the registration, and thereby also the possibility of having that long-term business of that brand or product that we are building.
And over the last year, you've in-licensed 26 products. That is a quite high pace on in-licensing.
It is.
Is that a pace that one should assume that you will continue, or is that that you are off to a flying start, so to say?
Certainly we have had a flying start and impressive growth and a testimony to a fast reacting company, I would say. We're not necessarily going for adding another 26 products over the next 12 months, but we're certainly going for adding products and licensing deals over the next coming months and build the pipeline. But we have now built a pipeline where we have the possibility of also taking maybe larger, more interesting deals and look for products that fit even better for future sales and look for segments where we can add value. So it's not a numbers game in terms of pipeline, but more a business game. So we will certainly be adding products to the pipeline. How many? Depends on the individual projects and opportunities.
And just for us to understand, how easy is it for you, like a small company, as almost like a startup in the industry, to get the attention of the large companies when they out-license their assets?
Yeah. Of course, we're building this on networks. And Carl Carlson, who has built Bluefish Pharma, I myself, Frederick, we are, I like not to use the word veterans, but we are experienced in the business and have a strong network in terms of partnerships and getting access to deals. At the same time, our focus on Scandinavia gives us the focus that there will be interest of getting products into Scandinavia and not necessarily finding a partner that is neglecting Scandinavia and just cherry-picking Germany and Italy and Spain. So our claim to fame is our focus on Scandinavia, our partnerships, and our knowledge of the market.
If you look at the listed companies that you are going to be compared to if you decide to go that route, they are generally quite appreciated by the market with generally quite high valuations.
True.
And my personal opinion is that that is because they are very light on research and development and very heavy on commercial assets, making them, of course, quite profitable. How do you make sure that you stay with that mix of high commerciality, low administration and R&D focus, so to say?
It's a strategic choice that we rely fully on in-licensing products and thereby don't have research and development cost nor risk. At the same time, as I said before, we need to make sure that we build and manage the complexity along with that. And that is to keep the entrepreneurial spirit in the company, to make sure that we don't drown in complexity and number of people that we regulate everything, but of course to make sure that we stay compliant, but also with an appetite for growing the business. And we can do that, and we see that other companies have done the same with few people building sizable million businesses and valuations that are high in the market. So we take inspiration from those and have also experience in doing this.
Is there a trade-off when you license portfolios or new products of licensing large products that might come to the market slightly later, or licensing products that might be closer to the market but not of the same size?
I think it's a balance, and you need to have a balance there. There are certainly big assets where you can compete, but then the competition will probably also be higher. What's probably is more interesting is to find the, let's say, mid-sized markets where we can compete and there's less competition. Some of those will be early, some of those will be later. But with the 26 products in the pipeline, we actually have a very good rhythm in terms of launches, and we'll have launches in a steady stream over years. So with that, we hope to fluctuate the business nicely in a positive way.
And the in-license products that you are going to take to market, is there an expiry date on those license agreements, or are they yours to keep forever if you like?
The products are ours to keep. We have typically a supply agreement that is yearly, not yearly based, but for a period. And that can be renegotiated or we can go elsewhere. But the asset in terms of registration is ours, and we can continue the business as long as we see a market for that.
Okay, thanks. Thank you, Lars, for a great presentation.
Thank you, Per.